there. Are you ready to, dive into the world of investing and maybe even channel your inner Warren Buffett? We're tackling a question you sent in. Is there one stock out there that just screams, buy now? We're really putting this recent Motley Fool article to the test. And it claims Lennar, one of the largest home builders in the U.S., might just be that stock.
Yeah, it's a bold claim, no doubt. What's fascinating here is how the article links Lennar's potential to the Fed's recent interest rate cut.
Okay, so break that down for me. I know interest rates impact mortgages, but how does that make Lennar the golden ticket in this whole equation?
Well, think of it like this.
Yeah.
Lower interest rates usually mean lower mortgage rates. Right. And lower mortgage rates make buying a home more affordable for a lot of people.
I'm following so far. More people buying homes, that's got to be good news for home builders, right?
Exactly. It's like a ripple effect. Or as the article puts it, a row of dominoes falling. The Fed cuts rates, mortgage rates drop, more people buy homes, and companies like Lennar who build those homes see their profits climb.
Okay, I like where this is going. But is this a temporary boost, or is there something more substantial behind this domino effect?
That's the key question. And this is where understanding the bigger picture is so important. The U.S. has been wrestling with a pretty significant housing shortage for years now. And the article's author even quotes Lennar's own executive chairman on this. He calls it a well-documented shortage due to years of underproduction.
So it's not just about this one interest rate cut. It's about a much larger supply and demand issue that's been brewing for a while.
Precisely. And that's what makes this argument for Lennar so intriguing. It's not just about a fleeting influx of buyers. It's about tapping into a fundamental need for more housing. This could be a much longer-term tailwind for companies like Lennar.
Wow, I'd never thought of it that way before. So we've got this potential wave of new home buyers thanks to lower rates A&D, a housing shortage that just exacerbates the demand. That's starting to sound like a pretty strong case for Lennar. But the article also dove into their valuation, right? Could you explain that for those of us who don't speak Wall Street fluently?
Absolutely. They highlighted Lennar's price-to-earnings ratio, or PE ratio for short. Think of it like the PE ratio basically tells us how much investors are willing to pay for every dollar of profit the company makes.
Okay, so a higher PE ratio would then mean investors are really optimistic about the company's future earnings.
You got it. It usually means they're expecting big things down the line. Now, the article pointed out that Lennar's PE ratio is actually lower than the average for the S&P Home Builders ETF.
You mentioned the S&P Home Builders ETF. For someone who's not familiar with ETFs, could you explain what that means in this context?
Of course. An ETF, or exchange-traded fund, is basically like a basket of stocks that you can invest in all at once. They track a specific market sector, index, or theme. In this case, the S&P Home Builders ETF holds shares in a bunch of different home building companies, giving you exposure to the entire industry.
So if Lennar's PE ratio is lower than the average for that ETF, does that mean it might be undervalued compared to its competitors?
That's essentially what the article is suggesting. Now, whether something is undervalued is subjective and depends on your individual investment goals and risk tolerance. But it's certainly something to consider, especially if you're buying into this whole domino effect idea and the potential for substantial growth in the housing market.
This is getting really interesting. So we have the potential wave of new homeowners, the ongoing housing shortage, and the possibility that Lennar is currently undervalued. That's a trifecta of potential benefits. But the article also mentioned a wild card that could impact Lennar's future, right? I'm dying to know what that could be.
This is where things get even more interesting.
Yeah.
The wild card they're referring to is politics.
Politics and housing prices. I knew they were connected, but how does this wild card play out?
Well, the article mentioned that both presidential candidates have talked about addressing the housing shortage. Now, the specifics are crucial here, and we don't have crystal balls.
Of course, of course. But what kind of policies are we talking about? Give me the broad strokes.
On one hand, you have proposals for things like financial assistance for first-time home buyers and tax credits for home builders. The idea being to incentivize both the demand and the supply side of the equation.
Makes sense. Encourage more people to buy and make it easier for companies like Lennar to build.
Exactly. Then on the other side, you have ideas like making more federal land available for housing development. That could directly impact how much land companies like Lennar have access to for new projects.
Okay, so you've got potential policy changes that could be good for home builders, which could in turn be good for Lennar and its stock price. Starting to see how this all ties together. So just to connect the dots here, we're saying that depending on who wins the election and what policies they prioritize, Lennar could see some big wins.
Potentially, yeah.
Yeah.
For instance, let's say one of the candidates pushes through legislation, making it significantly easier for home builders to get permits and develop land. That could be a game changer for a company like Lennar, giving them access to new opportunities and potentially boosting their bottom line.
That makes a lot of sense. So it's not just about the current housing market. It's about anticipating how future policies might shape the playing field. This is giving me a whole new appreciation for how much research goes into making smart investment decisions.
It's like a giant puzzle, isn't it? You have to consider all the pieces and how they fit together. And this kind of in-depth analysis is what sets someone like Warren Buffett apart. Speaking of which, the article did touch on a few other stocks that seem to be on his radar right now.
Oh, yeah. Which ones are those? I'm always curious about what Mr. Oracle of Omaha is up to.
Well, alongside Lennar, the article mentioned Apple, Amazon, and Occidental Petroleum.
Interesting. That's a pretty diverse mix. Let's start with Apple. That one feels like a no-brainer in our tech-driven world. Any specific reasons why Buffett's bullish on them right now?
The article highlighted Apple's upcoming AI initiatives and how those could give a significant boost to iPhone sales. They're betting big on the next generation of technology, which seems to be a recurring theme in Buffett's recent investments.
Okay, that tracks with his long-term strategy. What about Amazon? They're practically taking over the world, it seems like.
Right. With Amazon, the article focused on their continued investments in technology, their dominance in cloud computing, and just their overall growth potential. They're a behemoth for a reason, and Buffett clearly sees that.
Makes sense. Now, Occidental Petroleum, that one always stands out to me in a world increasingly concerned about climate change. What's Buffett's angle there?
They're heavily invested in carbon capture technology, which seems to be a key factor in his interest.
Could you explain what carbon capture is for those of us who aren't scientists?
Essentially, it's a way to trap carbon dioxide emissions from industrial processes or power plants and prevent them from entering the atmosphere. It's seen as a potential tool in the fight against climate change.
Okay, so Buffett's looking at the bigger picture here. Even though Occidental Petroleum is an oil and gas company, they're investing in technologies that could mitigate their environmental impact. It's like hedging your bets, in a way.
Exactly. It's about recognizing that the world is changing and investing in companies that are adapting to those changes. And, of course, you can't ignore the geopolitical factors that might impact oil and gas prices in the coming years.
It's never just one thing, is it? It's this complex web of factors that savvy investors like Buffett can somehow decipher.
Precisely. And even then, there are no guarantees, right? But that's what makes investing so fascinating. It's about doing your homework, understanding the context, and being able to connect those dots. That's how you start making more informed decisions.
Well said. So we've gone from this one article claiming Lennar is the stock to buy to a much broader conversation about housing market, politics, and even a peek into some other stocks on Buffett's radar. A lot to unpack.
And that's the beauty of a deep dive, isn't it?
Yeah.
You start with a single question, and it can lead you down all sorts of fascinating paths.
Honestly, I'm feeling a little overwhelmed, but
right.
in a good way. Like, my brain just did a deep dive into the world of investing, and I'm seeing things in a whole new light.
That's what we're going for.
Yeah.
It's amazing what you can uncover when you start digging beneath the surface.
Right. We started with this article about Lennar, and now we're talking about carbon capture and the future of the housing market. It's a lot to process.
It is, and it highlights why it's so important to do your due diligence before making any investment decisions. Don't just chase the hype. Understand the why behind the hype.
So, for someone listening to this, maybe someone who's just starting to think about investing, or maybe someone who's always wanted to invest like Warren Buffett, what's the biggest takeaway here?
I think the core message is that investing isn't just about picking stocks. It's about understanding the forces that drive those stocks. It's about connecting the dots between economic trends, political landscapes, and even technological innovations.
So like we talked about, even if you agree that the housing market is ripe for growth, you still need to consider things like potential policy changes and how those might impact a company like Lennar.
Exactly. And don't just rely on someone else's analysis. Even if that someone is Warren Buffett, do your own research, consider your own financial goals and risk tolerance, and then make the decision that feels right for you.
That's such an important reminder. It's easy to get caught up in the excitement of a hot stock tip, but ultimately, it's your money and your responsibility.
Couldn't agree more. Investing is a journey, not a sprint. It's about making informed decisions that align with your long-term vision.
Well said. So, for anyone listening who was intrigued by the Lennar argument, what's your final piece of advice?
Don't just take our word for it. Go back, read the article, and do some digging of your own. See if their analysis resonates with you, consider the potential risks and rewards, and then make the call that feels right for your unique situation.
I love that. Informed decisions are the best decisions. And who knows, maybe there's a future Warren Buffett out there right now, just waiting to uncover their next big investment opportunity.
And if that's you out there listening, keep asking those questions, keep exploring, and keep diving deep.
This has been an incredible deep dive. Thank you so much for joining me today and for sharing your expertise.
It's been my pleasure. Happy investing, everyone.